The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 17th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. I hope everyone out there had a great day yesterday and having a good start to your morning. Let's make sure we do everything we can to have an extraordinary day. Now, my specific outcome during the next hour is to help you to become a better money master and to provide you with the tools that just simply empower human potential. Because living up to our potential, I don't know about you folks, but I believe it's something that we must master each and every day. So let's begin our day with empowering beliefs, what I like to call the 9 rules of the universe. The universe is consistently saying these 9 things to us. Number 1, it says, hey, if you don't move, I won't move. Or said another way, if you sow, you can reap. But, folks, you first must sow. Number 2, it says, hey, unless you change what you are, you will always have what you've got. Number 3, the way you do anything, it is the way you do everything. Number 4, leaders are readers. It's not what books cost. It's what it will cost if you don't read them. Number 5, don't say, if I could, I will. Get rid of that. Say, if I can. I'm sorry. Don't say, don't say, if I could, I would. Boy, I really butchered that, didn't I? Guess the universe didn't get me all set this morning. Don't say, if I could, I would. Say, if I can, I will. We'll get things back on track. Or number 6, wherever you are, just simply be there. If you're at work this morning, be at work. Concentrate on work. If you're at home, be at home. Of course, if you're with us here at TFNN, just concentrate on us. Number 7, don't set your goals low. If you don't need much, you just simply won't become much. Number 8, the universe says, hey, happiness isn't something you postpone for the future, for goodness sakes. It's something you design for right here, right now. And number 10, time is our most valuable asset. Yet many tend to waste it, kill it, and spend it rather than invest in it. Not you, because you're investing your time with us here at TFNN. We really appreciate that. Respect the rules of the universe, and they will respect you. It is Terrific Tuesday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow up 25 points, S&P up 3, NASDAQ Composite up 19, Russell 2000 absolutely on fire this morning, up almost 10 points, up 0.8%. NDX 100 is up 9 points. That's 0.25% out here. New York Stock Exchange is positive. VIX Index now down 42 cents out at 12.23 and falling fast. It cannot handle that 50-day exponential moving average line out there, right in that 1270-ish zone out there. That's a big message. It's tried and tried and tried. Can't bust through them. That bodes well for the bulls out here. Does not bode well for the bears. So let's go take a look at the markets. Let's start off. Let me switch over here. Let's go take a look at. I just got to find where I put the best chart to be able to do this at here. I think I've got to switch over to this. Okay. So let's go take a look at the ETF structure here, since most everyone has the ETFs. And let's start off. Let's take a look at the IWM first. Let's go take a look at it because it truly is on fire. So, and what do I mean by fire? It's moving higher. It's leading the markets higher. So what is the IWM doing here this morning? Number 1, it's taking on a swing point. It's taking on its resistance level using a market profile. Market profile said resistance inside the IWM was 116.84. Look, it's a daily chart that we're looking at. A close today above 116.84. The message it carries with it is do not be short the IWM. Now, if you see today, it closed above that. Not only closed above that, but it closed above the most recent swing point, June 9th. And that high out here, that was at 113. I'm sorry, the high is at 117.48. 117.48, and volume there is 44 million shares. A close above that with more than 44 million shares. You've already done 9 million shares in only about 41 minutes of trading. So now you've got volume out here if you're listening to the show yesterday, so the IWM really wants to get, I said, couldn't tell you when, but I did say that what it wants to do is at a minimum get back to the swing point high. Excuse me for a moment there. That's the March 7th area. That swing point high out there on March 7th is out at 120.47. And that's what it just simply wants to do. It wants to join. I think it wants to do that and more. The and more is it wants to get above its swing points, just like the S&P, the SPY, the Qs have done. Excuse me. Sorry about that. I have to take one more swig. Swig is a technical term that us commentators have to use, especially when we've taken in a hairball out there. And I think that's what I've done out here. So when we take a look at the daily chart here for the IWM, very strong this morning. Says if you're short, please make sure that you've got a stop in place out here. I can't tell you what's going to happen the very next moment. Anything could happen the very next moment. That's why I use stops out here. But very bullish chart when we take a look at the IWM. If we go take a look at the, let's go take a look at the, let's go take a look at something that's not bullish, right? Let's take a look at the SPYs out here, because it's really the fight between the Russell 2000 and the NASDAQ versus the S&P and the Dow. And you'll see that play out right here, right now. Now, what the SPY has not been able to really do is crack its unfair low. Its unfair low, using its market profile, is 194.01. Right now, it's running into its point of control, its area where it likes to just kind of hang out, and that's in the price area right around the 194.74-ish type range out here. But it's resistance, it's area to be watching, 195.64. Close above 195.64 would be very bullish for the SPYs. Of course, it all depends on what kind of volume it has. It may or may not, I should say. But if it's coming into the swing point, into the June 9th swing point, with more than 65 million shares, that too would be a bullish message. The volume so far today, 14 million shares. Again, the volume is 65 million shares that it would be going against. So you got nice volume here this morning inside of the SPY for a terrific Tuesday. So this chart does not look bearish. It's bullish to neutral. Actually, you have to go with the bullish case out here inside of the SPY. So here's one of the things that's been kind of weak, and you're not seeing a bearish message. That is most certain. If we take a look at the Dow Diamonds right now, Diamonds trading out at 167.98, up 28 cents, up about 0.2% out here. The Diamonds say, how about this? Diamonds right now are taking on the resistance level of its unfair high. That's at 167.78. A close stay above 167.78. That would be sending a bullish message out here. Now, it's got a little bit of room. It's got some work to do to get up to the June 9th area, the high of which is 169.58. But volume up there, only 2.7 million shares. So far today, 772. So you've got volume here inside of the Diamonds. Now, a little bit of a downdraft that it had, a little bit of a supply line, 5.4 million shares on June the 12th. That's really what it's going against. But, hey, folks, it's already done 773 in a total of 44 minutes of trading. So it's got some pretty decent volume out of the gate as we speak right now. So be watching that 167.78 level as far as a close today. A close above that would be bullish inside of the Dow Diamonds. Let's finish this off and take a look at the Qs out here. Let's see what the Qs are doing. The Qs are finding support as well. They've not been able to break through the support, the unfair low, which is at 92.31. Right now you've got the Qs trading at 92.65. Their resistance level is at 93.02, so not that much further away out here. Not a whole lot of spreading out that's going to help me on this chart. The swing point is, let's see, 93.02, 93.02, yeah, 93.02, and that has got volume of 22 million shares, so the low of that swing, it's already trading into it. The low of that is 92.50. You're at 92.60. Volume there, again, 22 million shares. Today it's done 5 million shares. So the Qs have volume. Moving into the swing point, it says that they're going to test 93.02. A close above 93.02 on the daily chart for the Qs, and that, too, would be very bullish out here. What I really think we're looking at, I mean, it's coming to these swing points with highs. As I said to subscribers this morning, I think, we're looking at a consolidation pattern out here that could last a while. And the high I thought the highs maybe have been put in, but we'll have to see because if these highs, because they're coming into these swing points here with some volume, so if these highs can be if these highs can be taken out today, then I was wrong on that account. We have not seen the high of the consolidation level. My concern was I'm not sure where the low of the consolidation was, but today with the volume that we're seeing here. It's pretty impressive at the early stages of the trading session. We'll see how the day plays out here. I mentioned the VIX earlier. If we take a look at the VIX index, you'll see that it's been trying to deal with and fight the 50-day exponential moving average, which has acted as a resistance line ever since April 16th out there. And as long as the VIX trades below that, you're in a market that's going to just simply either move higher or consolidate out here. So we've seen today is the fourth test. A lot of time left in the trading session out here. Today is the fourth test of that trading of the attempt to clear that area. But if you can't bust them up, I guess it'll try and go bust them to the downside out there. Whoops. Didn't necessarily mean to do that. So that liquidity gauge thus far is still saying plenty of liquidity in the market. That's how Stevie likes to use it. Of course, our other liquidity gauge, that's the Euro-Japanese yen. We covered that earlier in the first hour, but just a quick peek in on it just to see what has been going on since then. Yeah, this is nice and long and strong out here. It has held the 0.786 Gartley buy lows out here, which were tested over the course of the last four trading sessions out here, and it has moved off of those lows. In order to get really bullish, it needs to take out its swing point high, its most recent one, which took place here on June the 9th. But right now, it's making of that pattern here that it completed to the downside, it's making the 0.382 retracement, 138.58. It closed today above 138.66. That'll say price should move to 139.15. 139.56, and maybe it goes ahead and takes out the June 9th area out there. So, but the message as we speak thus far is bullish when we take a look, or liquidity bullish when we take a look at the Euro-Japanese yen. Let's go check in on, so we covered the ETFs. Let's go check in on some stocks that are moving in the marketplace out here. We took a look at Netflix earlier. Netflix is on a tear. It's got volume moving into a swing point. We took a look at Edwards Life Sciences. That too was moving above resistance with some volume out there. Let's look at something moving to the downside. Let's go take a look at Shire PLG. SHPG is the ticker symbol. That's the leader in the clubhouse at downside off $4 and change after having wide price spread, accelerated volume, taken out a resistance area yesterday. There's nothing bearish about this at all. Yesterday had volume to the upside of 1.5 million shares. So far today, trading sideways, a little bit of profit taking. This has an A to B equals CD to the upside out here. On the daily chart that we're looking at, the A point is the April 14th low. The B point is the high from May 2nd. The C point is May 16th. Yeah, this has higher to run. It wants to get up to the 202-ish level, maybe even 212.88. 877-927-6648. Give us a call, folks. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the show, folks. We've got the Dow up 22, S&P's up 3, NASDAQ composite up 20 points right now. Solar City out with news saying they're going to build the largest solar plant in the world. I think that might have been what it flashed across my screen in upstate New York out here. It is trading up about 10% here this morning, up $5 and change. Let's go check out this stock chart and see what its message is. Today, moving above its resistance level on the daily chart here, the unfair high at 54.92. You've got good volume behind the move out here. So taking out a swing point that did have volume, that was on May the 8th. That had volume there of 15 million shares. It's done here this morning, 5.4 million shares. Wow. It really does have volume in this thing. Let's pull this back further. Is there volume at the highs? Well, there was volume moving into the highs. That was back on on April 25th. Let me take a look at the weekly chart out here real quickly. See what the weekly chart shows. Weekly chart shows, a close above 58.68 this week is changing the trend inside of Solar City. Let me go back to the daily out here. It's really not. Let me take a look. I'm going to stay on the weekly here just for a moment. I want to see what kind of retracement this thing actually did. What I'm doing, folks, I'm going to come off of the September 9th, 2013 area. Let's just take a look at the retracement from, it might be actually the September 2nd. So the September 2nd low to the high that was put in out here on the week of February 24th. Nice going there, Steve. Let me come back and we'll grab the retracement ruler, and I'll do that again. Okay, I grabbed the wrong ruler. You got to say, hey, come on, get your act together. Come on, it's a live show. Okay, there we go. Oh, I can't believe I did that twice. Must be the Kool-Aid that I'm drinking out here. You don't want this Kool-Aid. Actually, you do. It's nice green juice out there. There we go. Okay, if we take a look at retracements, it made a 0.618 retracement. It made a little bit more than that. Got the 5125 area was your 0.618 retracement. That would be saying it could actually set up an A to B equals CD to the upside out here. Where would that take us to? I'm going to stay on the weekly chart. I'll go back to the daily here in a moment, see if there's any other danger signs. But, it's coming off of the C point nicely. It appears to be coming off of the C point nicely. That's what you really want to see on an A to B equals CD type move out here. Now, the A point is going to be that low on September 2nd. The B point is going to be the high on February 24th, 2014. And the C point we're going to use as the May 5th area, the low of May 5th. So 1-to-1 A to B equals CD on a weekly chart. This long-term projection, takes you back to about the 105, a little bit above the high, quite a bit above the high, 105.83. But that's what the weekly chart may be showing. So it shows some pretty good support. Let's take a look at the daily chart out here, because we know on the daily chart you've got some nice volume. So where is this going to run into trouble? Well, now let's go take a look at retracements from the high to the low. So let's take a look at coming from the swing point from February 26th on the daily chart. That was your swing point high down to the low. That took place here on May the 7th. Okay. And that shows us right now it's coming in a dead cat bounce at 0.382 retracement level with volume. That's at 62.05. So it shouldn't have too much trouble clearing that area. That would then say that this ought to trade up to about the 7209-ish area before it takes its next rest, and that is on Solar City. So not too shabby, and good volume behind it this morning. Let's take a look at, that's the upside. Let's take a look at what we have percentage-wise to the downside here. Is a company called Access Midstream. Actually, Accordia Therapeutics. But let's take a look at ACMP as the ticker symbol. Let's go see what it is doing. Looks like on the daily chart, looks like a key reversal session out here. So this is the name of this company. Come on, baby. There we go. The name of the company is Access Midstream Partners. There we go. Just put that up there. Now, when I say a key reversal session, a key reversal session requires three things. Number one, it requires that the market be in extended condition. Number of ways for you to be able to do that. One easy way is just take a look at the relative strength indicator. If it's up near that 70 level, that's going to tell you that a market is expanded, it's extended, it is stretched. Well, if you take a look at this equity, yesterday the RSI reading on this was 77.43. Okay, so you've got that. Number two, the session that you're in has to exceed the high and the low of that candle session. Well, the high's been exceeded. The low, though, 64.07. Today, 64.08. It has not been exceeded. Any tick below 64.07 today, and this becomes a key, potentially a key reversal session. We'll take a look at this a little bit further. That's Access Midstream, ACMP, when we get back from this break.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 8, S&P up 1, Composite up 16 points, Russell 2000 just very strong, up 9 points right now. The key number today, 903. 903 or greater in net advancing issues will go ahead and give the bulls the market back when it comes to New York Stock Exchange. So the VIX index down 22 cents, trading out at 12.43 out there. So I believe 12.70 is a 50-day exponential moving average. Before we went to break, we were taking a look at ticker symbol ACMP. I was trying to describe to you a key reversal session, and it looks like during the break it went ahead and it said, hey, Steve is talking, he's trying to give us an example out there, and so let's go help him out. So I want to thank you to all those sellers out there, because what I was saying was that, number one, a key reversal session comes from when you have an extended you're extended on the stock chart. Now you can use an A to B equals CD, a completed pattern. You can use Fibonacci expansions. You can use I like to use also the relative strength indicator, which as we pointed out, was at about 77.43 yesterday. So the market was extended. It was overbought. Second thing you need is a intercession. You need to see a move above and below the prior day's candle. Well, yesterday's high was 66.59. Today's high, 66.71. It also needs to exceed the low of the prior session. Well, the low, 64.07 yesterday. I don't think we've seen the low today. So far, though, the low has been 63.71. And then you finally need to close in the opposite direction. You get all three of those. They're called key reversal sessions. They're significant enough to be paying attention to. In this case here, you did have nice volume yesterday inside this equity. It did 2.2 million shares to the upside. But, boy, there's profit taking there this morning. But so far, albeit on light volume. Volume meaning 315,000 shares so far in an hour's worth of trading. So 300 times 6, 1.8. It's still not even enough if it kept up this pace here versus yesterday's. So what do we take out of that? I don't know. What we'll take is certainly don't be shorting this equity, even though you got a key reversal session, because you're pulling back on light volume and you haven't broken a swing point. So that would be one of the things. And you were at really all-time highs. How about that? Round number high? No round number high there. 66.71. This ought to find support at 62.80 out here. If it breaks through that, then that starts to spell some trouble inside of this equity out here. ACMP is the ticker symbol. Now, that's a key reversal session. Let's take a look at something that looks similar, but isn't a key reversal session. Let's take a look at Goldilocks. Let's look at gold. Here's the continuous contract for gold. Here's the daily chart that we're taking a look at. Now, at the bottom of my screen, I've got the relative strength indicator. If you go back to the trading session of yesterday in gold, we had a key reversal-ish type day out there, but we didn't have an extended condition. What do I mean? Well, if you take a look at the prior session, if we take a look at Friday, the high was at 1278. The high yesterday was 1285. You exceeded the high. How about the low? The low yesterday, 1270.90. I'm sorry, the low, not yesterday, the low of June 13th. I'm using yesterday's session and comparing it to the prior day. So if we take a look at the June the 13th low, 1270.90. Yesterday's low, 1270.50. Close in the opposite direction in red. It's a bearish engulfing candle. That much is for sure. And that's important as I show you gold out here, because this is truly the fight between the bulls and the bears. So it looks like a key reversal session. It smells like a key reversal session. But without having an extended condition, I have to say, no, I don't think so. What I do know, though, is it was a bearish engulfing candle. Now, why is that important? Why am I even sharing this with you? Well, gold has kind of a number of interesting patterns out here. One of the patterns is, and you know, sometimes we take a look at lunar trading strategy type things. We take a look at full moons and new moons. What most folks don't realize is that the full moon happens to have a fairly large impact, I can't tell you why, on gold. If you look at the bottom of my screen here, just an easy way to notate the full moon, if you can see them, it might be hard. They're the circles. Okay, it's obviously full, and it's totally bright. It's white out there. It's empty. And those dates happen to mark full moon days. Now, if you go back and you take a look at March 17th was a full moon and marked a high, and it was also a key reversal session out there. We saw gold move lower. The next full moon came in on the trading session of April the 14th. Bearish engulfing candle, no key reversal session. That happened to mark a short-term high. How about the next full moon after that? Well, folks, that took place here on the trading session of May 14th. This did have no key reversal session, neither overbought nor oversold. Nonetheless, here, and it was a dark cloud cover. Maybe it was a dark cloud cover. I don't know, because this was consolidating sideways. Didn't really have a trend, so that's not even a reversal candle. But it was a full moon, and we did see price moving lower. Well, the last full moon came here on June. Really came in on the 13th out here. I've got it marked here as the 12th, but if you really take a look at ephemeris time, it really came in on the 13th, and that high was not taken out. Therefore, bearish engulfing candle. You've got the last three full moons that have held as resistance. That high from yesterday is very important, 1285.10. If you see gold close above that, then you can say the heck, or whatever you'd like to say, to the full moon strategy. What you'd also, as far as gold, what you'd also be doing and what you'd also be seeing if that 1285 gets taken out, at 1280.30 as we speak right now, that is your 50-day exponential moving average, and that has held as resistance here. It was tested again yesterday, so that's also another important area inside of Goldilocks. And why is all that important? Well, because we have competing patterns here. You still have a confirmed A to B equals C to the downside when the swing point here from the trading session of April 1st, that low of 1277 was was taken out with volume. And then when I go ahead and I put that together with the longer-term cycle patterns that are out here inside of gold, I don't have this updated for the commercials position here. They're a net short, net long position. I believe I looked at it, and they were getting still a little bit less net short. They've continuously been net short, but they're getting a little bit less net short. But this is a 13.5-ish type month cycle that you're seeing going across the middle of my screen out here, and it's really good at identifying significant areas of swing point lows or highs. Lately, it's really been marking some swing point lows out here, and that doesn't take place until for a couple more weeks back in July. But this is as Barbosa, Captain Barbosa, I guess, as he would say, from Pirates of the Caribbean. We're just using this here as a guideline. And it really means that a low, in my mind, a low is trying to be formed here between now and a month from now, a little bit less than a month from now or so inside of Goldilocks. But pay attention, to the candle signals. Pay attention to the resistance areas, whether you're long or short, and know that those are areas that there's going to be a ton of information that's going to end up being released to you. That's what's going on as I take a look at gold. If we look at silver out here, hi-ho silver. Silver yesterday giving you a little doji candle out there. So whereas you had kind of a key-ish, reversal-ish type signal yesterday inside of gold, silver, the message was that it got tired of its move. Now it's tired. That doji candle happens to have a lot of meaning yesterday. Why? Because it came at a resistance level. Resistance of what, you might say? Well, how about just resistance at that 100% move of a move, getting back to the swing point from May 14th out there. Today's session would say, now today you've got if it closed like this, you've got two dojis in a row. That tells you that silver would truly be losing its way out here. Now, price is above the 50-day exponential moving average, so that's a plus. That's the black line going across my screen out here. That's out at 1947. But two doji candles up at resistance. Look, if it closes lower today, it tells you leaves are falling from the trees, and it's not a convincing move to the upside. Not in my work. It's not a convincing move at all to the upside inside of silver. So that's its message as we speak right now. So that takes care of the metals commodity complex, or gold and silver, I should say. Gold back $7, silver down 4 pennies right now. Let's go check out some other stocks here that are moving and grooving out here. Let's go take a look at Priceline. Let's go see what Priceline. It's the leader in the clubhouse on the way down. It's off $6 and change, off 0.5% here. It's trading below its unfair low out here. That's its support level, which is $12.35. Once it got below that, which was on June 13th, or June 12th, it went back and tested it and rejected it. So now let's take a look at where it's trading into. It's moving down towards its swing point here, which has volume. So you've got volume at a swing point low, which is May 8th. It looks very much like what Priceline is going to do is make its way down there. You say there, I say where. It is a price from 1087.26 to 1152. So that's the price spread, and it looks like that is where Priceline is headed towards out there. You could certainly say, let's see, volume here, the trading session of June 11th, 748. Wow, you could really make the case. Let's do this here. I'm going to make the case. Let's show the pattern that it actually completed or has formed an A to B, because confirmed an A to B equals CD to the downside out here. Here is the pattern. Well, that's the 1-to-1, so it's already hit that. But you see how it's coming off this C point here? See how it's traveling on the left side, on the inside there? Really says that it wants lower price. So I do think that Priceline is going to go ahead and make an attempt and make a run for that May 8th area. Again, on the that swing point is from 1152 to 1087. That is on PCLN. Let's take a look at also the downside. You've got LinkedIn. It's off about 2%, down $3 and change. Let's look at its daily chart, see what it's doing. Not as bad as Priceline, but right now trading into what should be resistance, 164, it looks like, 164.37. So it's trading below that. That says that LinkedIn ought to find some support at about the 157.86 area. Volume so far this morning, not too bad, 679,000 shares. Yeah, not too bad. Had a little sign of strength here back on the trading session of June 10th, about 2.7 million shares to the upside out here. I just want to take a look at LinkedIn. Did this get past the B point with volume? The B point here would be the trading session from May 29, 2.5 million shares, and it was passed with 3 million shares. So you've got a complex A to B equals CD to the upside. Let me show you what I'm talking about. We take a look at LinkedIn. So LinkedIn here forms a low. LNKD, by the way, is the ticker symbol that we are looking at, LNKD. And we're going to use as a swing point low here for the A to B equals C to the upside, the complex A to B equals CD, the May 7th low. So May 7th is going to be our low, or going to be our A point, I should say. Our B point is going to be the high here from May 29th. The C point is going to be back down here on June the 5th. That's at priced at 152.18, it looks like. So this wants to get up to the 180.53 level, maybe even 188.24 range out here. The A point that we used here for LinkedIn was a hammer candle. Looks like a doji, but see how just very narrow, if you look at it closely, very narrow wick at the top of it. That's a doji that's actually a hammer candle out there. So a nice, strong level of support. Maybe this pulls back into the 157.86. If we can do that with light volume, that might set up a little bit of a buy if the market is, in fact, moving topside out here, because you do have a confirmed A to B equals CD, meaning the B point was passed with volume and then some. That is on LinkedIn. Sorry about that. Let's go take a look at the jazzy one. Let's take a look at Jazz Pharmaceuticals, JAZZ. That's up about 3% here this morning. That's getting above its resistance level. If it can close today above 146.56, that's actually strong resistance. Because you can see, if you're watching this on Tiger TV, you can see the market profile on my system out here. That market profile, there was an old one that began back in April of 2014, April 25th to be specific. We have a newer one that formed here on June 10th. So getting above that 146 level would be very bullish for the jazzy one. It's also trying to take out a swing point from April 22nd. That's got 1.2 million shares. It's into it so far today with 330, so pretty decent volume. That is on Jazz Pharmaceuticals. Let's go to Victor in Paramus, New Jersey. Victor, how you doing this morning? Oh, looks like Victor had dropped. So I think he wanted to take a look at AT&T as the ticker symbol. So no problem there. Let's go see what it's doing. No idea whether Victor's long, short, or in between, but let's go take a look at it. Right now, if you take a look at the daily chart, it's created a little market profile here the last couple trading sessions. 35.14 is a number that it needs to get above to be long out here. Not that you would be short necessarily, but if we take a look at AT&T, it has been consolidating. Pretty decent consolidation range. The bottom of that consolidation really takes us back into, somewhere right around the 34.40-ish type area, 34.50-ish type range. That is on AT&T. We get back from this break, we'll finish off taking a look at AT&T. Right now, we've got the little bit of a flat market here. The Dow is down 12, S&P is down 1. It's the fight between the bears, they're there, and the bulls in the Russell and the NASDAQ. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is off 13, S&P off 1, Composite up 6, Russell 2000 up 5 points. We were taking a look at AT&T before we went to the breakout here, and I've got the weekly chart on my screen here for AT&T. Right now priced at $35.09. If we take a look, it's really kind of traveling with inside a little box here. This is the TAS market profile box. Should have support at $33.62. So on a weekly chart, if you're looking to buy this, if it closes below 34.55, 33.62 would be the number that you would be looking at. But this thing has really been consolidating for quite some time, you'd have to say. On the weekly chart, I would say the consolidation really takes us back into about the April 2012 timeframe. And we're June 2014. So a real long consolidation. So since it's been consolidating like that, your buy on this is towards the bottom of the consolidation pattern, which says it really would take you into the swing point area of around March the 3rd, 2014, somewhere between 32.59 at the high to maybe 31.76, and that would more likely be your better type entry point inside of AT&T, and then you're not going to get much out of it. You know, at this stage here, it's been running into resistance right around the $36 mark out there. So I don't know that 32 to 36 is worth the reward to risk trade out there. But that's what AT&T is doing. That was the weekly chart that we were looking at. And, Victor, I hope that helps you out. Now, what are the markets doing? When we came on the air, we were taking a look at the Russell 2000. Let's go switch back over. Let's go take a look at that. The IWM is how we were taking a look at it. We were looking at a daily chart. As we put this on the screen here, it's got its resistance level, its unfair high that it's trying to take out. That happens to be at a price level of 116.84. Close above that is bullish. What it's also doing, it's traveling inside the swing point from June 9th. That has volume of 44 million shares, and it so far today has done 16 million shares. So volume has dropped off a bit. We're about an hour and a half into trading, but volume is still pretty good for a Tuesday to take on the swing point from a June 9th. Folks, it closed inside of 115.66 out there, and it closed inside there yesterday. The volume yesterday was only 30 million. Well, it was 30 million shares versus 44. Today it's done 16. Okay, volume's increasing as it comes to that swing point. The IWM to me is blaring out that it's going to go test the June 9th high. That's at a price level of 117.48, and it's probably going to take it out. It's going to take it out, and price is going to move all the way back to the swing point high. It's an all-time swing point high, which is going to be what March 4th is 120.58. Yeah, so March 4th, and the volume out there is 112 million shares. Looks like that is where the IWM wants to trade to. So it's got resistance. We can see that. 116.84. That's the area to be paying attention to. Inside the Qs out here, it's really going to be about the IWM and the Qs being able to move the markets higher. The Qs not doing a whole lot. Nothing to the bearish side. 92.31 is its unfair low today. And the unfair high, 93.02, its resistance level. Close above that would be extremely bullish. If we take a quick peek here at the VIX index, I believe it's about 1269 is the number to be watching. That's your 50-day exponential moving average. It has been tested, but thus far it has been rejected. Right now, we've got the VIX trading at, and this is the stall because it's further back on my chart here. Thought I could get it there beforehand, and no, I did not. Where is it? There we go. The VIX right now is trading at 1256 out here. Folks, it is Terrific Tuesday. That means our man Basil Chapman is up next. Then we've got the Options Hour. Daryl Martin, David White, Andy Heck, the Tom O'Brien Show from 4 to 6. Thanks so much for joining me today. Have a great Tuesday. I look forward to seeing you tomorrow. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.